day 3 of the Financial Rise Up Challenge. You guys know the drill. I gotta check Facebook, make sure we're live. And we're gonna give a little bit more time for people to jump in. Hi, Jeannie. Hi, Tinya. Welcome to day 3. Acknowledge you guys for showing up every day. You know what that tells me? That tells me that you are committed. I'm going to use a syllable, AF, committed to changing your life. That's what that tells me. So I acknowledge you guys for that. And I acknowledge you for coming in from Long Beach. So this is like 9 o'clock in the morning and you are here for learning how to change your life. You're my people, girl. You my people. So let's give it a couple more minutes before I introduce our beautiful Paige. Look at that smile.
Aren't you sweet, Lorna? Thank you. I'm excited to be here. I'm excited to be
Yeah,
here. And fellow Californians, I'm in Simi Valley, so hi, Long Beach. Hi,
yeah,
Jeannie.
yeah. So let's see who shows up today.
I'm in North Carolina too.
Yeah, North Carolina in the house.
Hi.
All right. So you know the drill. Set your intention for today. So today is going to be, I was just sharing a page. Today is going to be meats and bones. When I say meats and bones, I mean we're going to give you practicality, right? Day 1, I set the foundation, your why, your vision, making decisions, taking action, right? Yesterday, Eva was amazing. Kara was on fire when they gave you their story and kind of like solidified what I said on Monday, that you need to be in your own purpose, in your own lane, right? Really standing in your power to create what you say you want. So today, we're going to see, okay, well, what is it that you want, right? Is it working in notes? Why would you want to do that? Is it digital currency? Why would you want to do that, right? So now today, we're going to give you some practical things that you can apply and implement and really, determine what avenue you're going to go down to start creating the wealth, right? And then obviously, it's not just these 2 avenues that you have the opportunity. We have 2 more days after this, right? And that's going to add more that you get to decide on, right? So now you see what I did day 1, you get to figure out how you're going to make a decision, right? Which is why you need to know your why, right? So you can take action. It is all coming together for you. All right. So without further ado, I'm going to go ahead and introduce Miss Paige. Give me 1 second. Let me get her on my screen here. Okay. All right. So today, I want to really bring this amazing individual to the stage. I've been following her for, I think, what are we in? 2023. Paige, I'm a stalker. I think I told you that before. I've been following you I've been following you for 4 years. 4 years. Yes, 4 years. And so Paige teaches about building wealth with notes. She's going to tell you what that is. She really drills down to details on how to buy non-performing notes, what to look for, and the due diligence that you get to do before you actually pull the trigger on that, right? She has master classes. She's always teaching, always offering value and information on how to do this. And she's really, really keen on helping homeowners to have a new start. In a nutshell, that is what I know and who I know Paige to be. So I'm looking forward to her sharing this with you. And if you're looking for new ways to create income passively while mitigating other losses for other people, this is your girl. So Paige, welcome to the stage, my friend. I am so super excited to have you here because, like I said, I've been stalking you for 4 years. I've been trying to get you on my show for 3. So welcome, welcome, welcome. Just share one more thing with the audience and tell your story. That's a better way to say it. Tell us your story. How did you get into buying notes? And then we'll get into a few more other questions so that everyone can understand what this is.
Absolutely. And Lorna, thank you for having me on, and thank you for cyber stalking me and being so persistent. I love that. Persistence is key, everybody. It's all about relationship building. Okay, so for me, I have been a real estate investor for about 27 years now. I've been in the note space for about going on 9 of those years. And I love this space. I started in real estate by default. I did not choose real estate. Real estate chose me. And I had a death in the family, and it was my grandmother, and she had a very large estate, some holdings in California, some in Arizona. I took the Arizona holdings and I went off in my early 20s, knowing nothing at all about real estate. And back then, there were no meetup groups. There wasn't Zoom. There was barely the internet, you guys. So I literally had to open my mouth and ask questions from people, that had the answers. And the estate was largely in debt. It was 4 million in debt. And I thought, I've got nothing to lose, right? So let's try it. And I was very fortunate that I have a knack for this. I realized very quickly that I had a knack for it. And because I was willing to be bold and step out and ask the questions and associate with other people and build those relationships, I was able to turn that company very quickly. I brought it back into the black within about 3 years. And I was able to use that as the springboard and really build my company. Now, I ended up ultimately buying the company from my family. I started my own construction company. And this is all leading up into 2005, 2006, 2007 crash, right? So I grew very, very fast. We held all of our licenses. I was making money hand over fist. I had a ton of assets. And then the crash happened. And I'll tell you, I saw it coming. I just figured, hey, this isn't going to happen to me because I'm only about 10% leveraged, meaning I only had debt of about 10%. I had all these assets, I had big equipment and cash flowing assets, et cetera. And what I did not realize is that the people that owed me money couldn't pay me. So when the crash happened, I had a decision to make. Do I file for bankruptcy like many people did and just wipe all that out? Any debt out and anybody I owed and try and salvage what I could for me? Or do I decide to fire sale all of that and liquidate everything at rock bottom prices and pay everybody I owed money to? And I chose option number 2. The hardest part, though, for me was telling 36 families that I had to fire them, that I could not keep the doors open. I couldn't sustain any longer. That was the hardest piece for me. And I was very fortunate that I had all those assets. But I'll tell you, it was a bitter pill, because at the end of the day, even though I paid everybody off and I had to, let people go, I personally lost $20 million. Now, I'm not going to say that did not sting, because it did. That's a huge amount of money. However, I built it once, I could do it again. The difference for me was this, right? Mindset. And then putting forth action behind the mindset. That's a huge piece. So I went away from real estate for a little while, licked my wounds, and decided, you know what? I got to come back, but I'm going to come back smarter and stronger. So I came back in, I did what everybody does, right? I started wholesaling properties and fixing and flipping properties, because that was my niche. That was my roadmap, and building capital. But I'd heard about this thing called notes. And I thought, what is that? And I started learning what notes were. And when I got it, angels sang for me, and I have not looked back.
Wow. That I heard so much, and I want to just really bring forward a few things because I want people to hear it, right? So you were already in the wealth, right? You were already in the wealth. And what I heard was, and I'm going to use a word that's going to sound bad, but it's really not. And it's called failure, right? What I heard you say is you failed your way to success, even though you already had wealth, because you inherited the wealth, right? So I want to really land that for the audience, because a lot of times people think that, huh?
Sorry, slight correction. I didn't inherit it. We were in debt. I built it. And then I failed. And then I built it.
Got it. Got it. Great correction.
Sorry,
Right.
sorry,
So no. We're having this conversation. If I heard it, that's why I say what I heard you say was right. And so I want the audience, I'm bringing this forward because I want the audience to hear that it wasn't just smooth sailing all the way through. That's what I want to land for people. Because even though you had, so here's the thing, and here's the distinction for me from your story is that you had, even though you were in debt, you had the properties, right? So in some form, it was some form of assets. You already had the assets, right? And the assets were failing. So that's why I call it a failure, right? And then it failed, and then you didn't back down. You're like, let me pivot and see what else is possible. And you pivoted, right? And then something else happened, and then you pivoted again. And that's the process, right? That's the process on the way to wealth. You know, I was sharing with the audience over the last 2 days. I was in a room with a room full of billionaires over the last 3 days, this past weekend. And that was the same exact trajectory that every one of them shared with me. Same thing. So I just want to land that it's not that it's not possible, but my point is, don't stop 3 feet from gold. That's my point. Don't stop 3 feet from gold. When something starts going awry, just pivot, ask questions, get support, right? So I love that. Thank you for sharing that. So
I love that you brought up that book. 3 Feet from Gold is a tremendous book. If you have not read it, please read it. Actually, Greg Reed, the man who authored that book, is my mentor. He's one of my mentors. So
beautiful.
Yeah, just
I love Greg. I was actually hanging out with him 3 weekends ago in Santa Ana. So yeah, it's an amazing book. Powerful story.
Really powerful.
And so which leads me to my next question. Because what is notes? Right? We're talking about real estate. We're talking about cash flow, right? We're talking about growing your nest egg, right? We're talking about growing your wealth. What in heaven's name is a note? So get ready, guys. Get your pen and paper out. Get ready to start taking notes.
So a note really is basically just a debt instrument, Lorna. That's all it is. It's a promise to pay. So there's many different kinds of notes that are out there. I focus on first position notes that are secured by real estate. And what that means is that the borrower, whenever you take a loan out to buy a house or a car, right, you sign all this paperwork. And one of those documents is the promissory note. It's the promise to pay the bank back for the money that they fronted for you to purchase whatever it is you're purchasing, the car or the real estate, right? The house. And there's in real estate, there's a giant stack of documents that you have to sign. All those documents that are encompassed are labeled one thing, notes. Okay. So it's basically just that promise to pay. However, I buy secured notes because credit card debt is also a note. And as an investor, you can actually invest in credit card debt. However, in my opinion, that's a very risky venture because credit card debt is unsecured. I buy notes that are secured by the real estate. So if my borrower has stopped paying, and that's another piece, you can buy notes that have stopped paying. They're called non-performing notes, or you can buy performing notes, right? Just strictly for cash flow. Performing is exactly what it says, is that that borrower is monthly paying every single month. It's mailbox money, everybody. Okay. I buy non-performing notes, and my notes are secured by the real estate. So I go in knowing that my borrower has stopped paying, but I am secured by the house. So I have the legal right, if I want, to take the house. Now I try a different approach. I try and start working with my borrower to get them to reperform. And I'm sure Lorna and I will talk about that coming up here shortly. You're muted, Lorna.
Trying to get back off mute. So non-performing performing notes. I love that you talked about the credit card debt, but I don't like that either, because there's no security behind it. And people can just walk away. They can file bankruptcy. I mean, they could file bankruptcy anyway, and then you're crap out of luck, so to speak, right? So here's my next question for you. Why would I buy a non-performing note?
That does sound a little counterintuitive, right? I mean, it does
Yeah.
sound a little crazy to buy something that isn't performing. The reason that I do that, everybody, is because in this space, I'm buying the note not based on how much money they owe me. I'm buying the note based on the securing collateral, which is the house or the bill. I'm going to call it, for today's discussion, we'll call it the house. I also buy commercial, but today we're going to talk about houses. All right. So I buy the basis is the value of the house. Now, sometimes the house is underwater, meaning the value of the house is lower than what the borrower owes. Okay. Now, I don't pay face value for the house. I mean, I use that as the basis, and then I discount it from there. Now, discounts have ranged. Right now, they're a little high. However, we in the note space know that especially Q1 of 2024, we're going to start seeing a lot more products. We anticipated more product and lower pricing kind of when in the middle of COVID, but the government has done things to kick the can down the road. They can't do that anymore. Inflation is here. Interest rates are extremely high. They're going to raise them again, I heard on Friday. So when I buy these notes based on a discounted rate of the current market value of the securing collateral, the house, I'm building in a cushion of equity. What that does, everybody, is it mitigates risk, and it allows me to generate an immediate profit potential the minute that I buy that note. Okay. I'm building in equity. So that gives me maneuverability to be able to work with my borrower, forgive some of the debt. I don't have to forgive any of it. It's legally owed to me, but in order to motivate them to start paying, now I'm generating cash flow, right? Hopefully at the end of a period of time, whatever you choose as an investor that to be, hopefully at the end of the period of time, I'm going to also generate a large chunk of cash, because they're going to either pay me off or I'm going to sell the note as a performing note. We'll get into that in a moment. But that's why I buy non-performing, because performing, you don't get much of a discount. I like big risk mitigation. I like to prevent risk. I'm very risk averse.
Yeah, that makes sense. That makes total sense. So so that I don't want to be going over our audience's head.
Yes.
So I get to get some feedback from you guys in the audience. Like, is what Paige saying, what she's saying making sense for you? So put it in the chat if what Paige is saying makes sense to you, because I want to make sure that you get it. Ooh. I'm not seeing anything in the chat. Are you seeing anything in the chat?
I am not.
Are there any questions at all? Is this landing for you? This is a huge opportunity to be involved in real estate, right? And not having to be the landlord and scrub the toilets and get call at 12 o'clock at night like I used to do. That there's plumbing issues. This is a huge opportunity. So I want to make sure that this information is landed. And if you have questions, please put in the chat. Okay, so you guys have been following Paige. Okay, so there are no questions. But what I love about this again is because I don't have to get into my hands dirty. And the other piece that I love is the fact that I'm bringing the note back to performing, which gives me the cash flow. So imagine the accumulation effect of that. Just like the compound effect of that is like humongous. So let's say you had, because if you had 10 deals, I'm just hypothetical, right? I know you have more than that, but 10 as a newbie, then you get 10 deals, you bring them to performing, and now you have cash flow on 10 properties, right? Plus the equity in there, right? Technically, because if they don't perform, you're going to take that house back. So it's like a win-win. That's a double asset. You like double dipping in my world, right?
It is. It's a beautiful strategy because you can literally generate not only cash flow, monthly cash flow without the headache of tenants and toilets. You also can generate chunks of cash in the same medium. And then sometimes you can even double or triple it depending upon your exit strategy, which we don't unfortunately have time to talk about today. But yeah, you can use that same asset 2 or 3 times to double or triple what you're expecting in terms of an outcome, which is brilliant for me. And again, there's no headache of the tenants and toilets. You technically own the property. You are secured by the property, but you own the debt that is secured by the property. So it's an amazing strategy, and I have not looked back.
So I know we're giving them a lot of things. So because I want to make sure we get to a couple more questions. So let me ask. It's the same question, but I'm turning it around. How do I do the due diligence on these? I'm going to get to your question, my friend. But how do you do the due diligence on these notes so that you can determine what are the best ones to buy?
Yeah. Okay. Now, this is a really important point, Lorna, and thank you. You could literally go out right now online and buy a note. Please do not do that. Please, please, please do not do that. And the reason that I say that is this: there are pitfalls. I'm not going to say notes is easy. All right. Nor am I going to say it's fast. Now, I've had some notes that have exited quickly, but I'm not going to make that promise to you that it's fast. You do need to, the bulk of your time is going to be spent doing your due diligence before you buy the note. Okay. And the due diligence can be fairly extensive, not expensive, extensive. Okay. There's all kinds of things that you need to check and verify before you buy the note. Once you buy the note, you now hand it off to your team members, right? So I use licensed debt collectors to handle all of that stuff. And I just manage the managers. So I don't even have direct contact with my borrowers, which is a good thing because I've got a really big heart and everybody's got a story, right?
Yeah.
So I use licensed debt collectors, but your due diligence is really, really, really important. And unfortunately, in our given time, I don't have time to go over that. I do teach that though in my workshop. So, I mean, and one of you, I see, I think I saw that one of you has gone through the workshop. So, so you know, I mean, I make the promise that due diligence day, your brain is going to hurt, but because there's a lot. Oh, but it's the steps are easy to follow.
Yeah. Okay. So there are specific steps to follow to do the due diligence before you buy the property. Okay. Correct. So let me ask you the tail end of that then now is, why is the due diligence so important? I know the answer to it, but I want you to tell us.
Yeah,
I
so
will tell them why.
good due diligence allows you to buy the note well, okay?
Okay. What does that mean? What does that mean?
Good due diligence is, it means for you that you're going to mitigate your risk. It means that you can hedge pretty much against any and all loss, okay? It took me a lot. My very first loss, I think, happened probably the 4th year I was buying notes. And the reason that I took a loss is because of the time. I had anticipated a certain period of time and it took twice as long. Okay. So because of that, there were extra, we call them workout costs. It's kind of like rehab costs for fixing and flipping houses. We call them workout costs for our notes, right? So we're fixing and flipping paper in essence, right? So my workout costs, I had only anticipated 12 months and it took almost 24. So that's why I took a loss. But when you do good due diligence, it allows you to buy the note well, and it allows you to pivot and be able to prevent, for the most part, I don't want to promise no losses, but it really allows you to mitigate that risk against costs.
Yeah, yeah. Super important. Rewatch this if you're going to be interested in getting involved in notes as a part of your strategy. You really get to do this due diligence. And here's the other thing I'm hearing, right? It's not an overnight thing.
No.
Right? So it gets to be a long-term strategy for you if you're going to decide on jumping into this arena to build that financial freedom that you're saying that you want. Okay, so I want to answer Jeannie's question. How much does these notes cost?
So notes can be anywhere from very inexpensive to very expensive. Again, we're basing the purchase price on a discounted rate of the securing collateral. So if you want less expensive notes, understand that the value of the house is going to be less expensive. It's going to be less, right? And probably in higher risk areas, but we all have to start somewhere. If you are one of those fortunate people that have other people around you and you have funds yourself, then you can get into a nice, healthy note, you know, for $25,000, $30,000, $40,000. It just depends. It depends on the securing collateral. Now, you can't buy a California note for $35,000.
Not happening.
You can't, I mean, there's not a postage stamp in California that you can buy, you know, that's valued at under $100,000. So,
right.
So everything is relative, everybody. And again, I teach this, like what to look for and how to do that due diligence. But I literally have a student that literally a month ago bought a performing note for $5,000.
Wow.
Yeah.
Amazing.
Does that happen every day? No. Can it happen? Yes. Does it happen? Yes. So, you know, the answer is it depends. It depends.
Perfect. Which leads me to my next question. How do you find the deals?
Relationship building.
Yeah.
I literally can do this business anywhere in the world, from anywhere in the world, as long as I have a cell phone and an internet, right? I spend $0 marketing for my deals. $0. What I do is I build relationships with asset managers who have notes for sale. That's what I do. I go to conferences. That's where I spend my money, traveling to conferences, right? So I go to conferences, I meet asset managers, I talk with them, I build those relationships. They refer to other asset managers. It's quite an interesting thing, the collaborative space that this is. Yes, there's competition, but it's far less than other forms of real estate investing, in my opinion. And it's very, very collaborative. There are a lot of asset managers that, again, you know, you do what you say you're going to do, and they're going to refer you to other asset managers, which is really cool.
Yeah, and being in the space myself, and I'm an REO agent as well. I understand the reason that the value that you bring. So this is why I'm saying this to you, right? Like, even coming in as an investor, once you know what you're doing and you build these relationships, they don't want that stuff on their books, guys. So they're gonna bring them to you. So the work that you get to do, remember we talked about work versus job yesterday, that distinction. So the work that you get to do is building the relationship, right? We talked about that yesterday again too. See, guys, you can't make this stuff up. The foundation I laid, it's all going to be applicable for you, right? Building that relationship, you're going to be able to pick up the phone and call somebody, and it's just going to be there. You're not going to have to do much for it, right? Because they're just going to know that you're the person who, you're your word. You're gonna do what you say you're gonna do. You're gonna come through, and they can depend on you. And that's what this is all about. That's how you build wealth, guys. It's through relationships. So
Yeah,
super
asset
cool.
managers, to your point, Lorna, you're absolutely right. Asset managers, everybody, are not emotional. That's a key distinction, is that when you're going after houses, like to fix and flip and a few other of those homeowners are very emotional. They're attached. In my space, the asset managers are not emotional at all. If the numbers make sense, the deal is done, period. It's
Yeah.
amazing. And
Yeah.
Lorna, you said something a little while ago that I'd like to, we're out of time, but I really want to quickly touch on.
Sure.
Understand, everybody, this doesn't have to be when I hear long-term play, in my mind, that means 3 to 5 years, right? I have plenty of students that implement this strategy, and they're in and out of notes in 12 months or less. So understand that if that's long-term for you, then yes, this might not be your strategy, but it might be your strategy. I don't know. So understand that you need to set in your mind, how long do I want to be invested in something? I call this my what. What is your what? What are my risk tolerances? How long do I want to be involved? What's my capital to deploy, and what do I need to get out of it? Right. So that dovetails on your why of you're doing this. It also allows you, do I need cash flow? That's another thing. Do I need cash flow or chunks of cash? Because that's going to guide where you go in real estate investing.
Yeah, absolutely. Yeah, when I said long term, I meant it's not a overnight thing, right? It's not like you're gonna, it's not like a wholesale deal where you can wholesale a deal and close in like 2 weeks. That's not this, right?
No, that's not this.
Yeah. So that's what I meant by long term. It's not it's not even like a flip, or it could be. I don't know. It depends on the situation with the asset manager, how long and all that kind of stuff, and how quickly the borrower responds, and how quickly the team can get a response from the borrower to say yes to the deal, right? So there's a lot of moving parts in it, which is why you get to have guidance. So Paige, talk to us about you have 2 free gifts. And guys, if you're getting your emails, so the link to the speakers page with their gifts are included in your replay email. If you're not getting it, just send me an email and let me know that you're not seeing that link. Really engage with us. Let me know what's happening so we can bring you the information that you need. Okay. So if you're not getting the link in the email, let us know, and we'll make sure that you get it so that you can take advantage of all these free gifts the speakers have to offer. So Paige, talk to us about your free gift, because you brought 2 to the table.
I did. Okay, so the free gift is the 10 most frequently asked questions about notes and note investing. So if you go to it, the link is in my speakers page, right? So you get those videos for free. And if you're interested in learning actually how to do this, my workshop is now online on demand. So you can learn at your own pace from the comfort of your home. It's ready to go for you. I give you everything you need to know. I don't hold anything back, including my resources for my team. So I give you my team information. And I also give you an analysis tool. And I teach you how to do that. So again, I'm going to give you not the workshop for free, but I do give Lorna's people $100 off. So that's
Awesome.
ready to go for you.
Amazing. And I thank you so much for that. I'm putting it in the chat so that people can have easy access to it as well. But you can, like I said, you're gonna get the email with all the information for all the speakers for this week included in it. Hey, Paige, what
Yes,
any last words for our audience today and for people who are watching the replay?
just don't ever give up. I only consider failure a failure if you don't learn from it. If you learn from it, it's not a failure, everybody. It's a skinned knee. And anybody who, in my opinion, who says that they've never lost money in real estate, it's going to happen to you. I want you to know that. I just want you to know. Hopefully you choose a venue, a medium that it's going to be reduced, right? But it's going to happen. So anybody that says that they have not lost money in real estate is either A, new, and which is okay because we all start somewhere, right? Or they're lying to you.
Yeah.
Period.
Period.
Subject. Any of us that are veterans that know, we all have skinned our knees. We're trying as educators, we're trying to let you use our skinned knees to learn instead of you using your own, right?
Yeah. We're shortening the runway for you.
Yes,
so
exactly.
Yeah,
So
absolutely.
don't be afraid of failure. Do it fast and learn and get back up.
Yes, let's go. Thank you so much for being here today. I've learned a lot. Audience, give Paige some love in the chat. Put your takeaways in there so that she knows that she landed her communication and that this interview has been of value to you. Take advantage of our free gifts. And Paige, you know we're going to stay connected, right? I'm going to stalk you even more now that we're friends, girl.
Sounds good, Lorna. Sounds good.
And all right. So
pleasure to be here.
Thank you. See you on the next one. All right. So put your takeaways in the chat as we bring up, so that we stay on time. We're going to bring up our next speaker. Give me a minute because you know, I got to figure out how to unpin and do all these jazzy things on Zoom over here. So we're going to bring up our next speaker, who is Miss Lori Sousa. And Lori is like, well, I didn't stalk her. How about that?
No, don't do that. Please.
Yeah. Lori is we've been friends for a stint, and we got some deep connections going on here. And she has been in real estate, for over 40 years. And she actually got into the digital space because she saw something, right? Unlike me, I saw it, but I didn't pay attention. Okay, so Lori is now what I would call the digital currency queen. She's like the person who, if you're gonna think about getting into digital currency, you got to talk to her first, right? So I wanted to bring her here. Remember, I said on Monday, guys, I'm bringing you my network. For the people who didn't show up, I don't know, y'all missing out, because I'm bringing you my network, and my network, they are unbelievably intelligent. They know stuff that it's going to take you decades to figure out. And like I said before with Paige, I'm shortening the length of time for you. So that's why I bring people like Lori Sousa to the stage for you, to give you the information you need to make decisions for your future. Got it? So before I start talking up this her whole time, I'm going to let Lori take the stage and let's start with your story, Lori, a brief story about how you got into the digital currency space. Briefly, because we know you're a real estate investor as well. But what got you into the digital currency space?
Well, thank you, Lorna, for having me on your summit. I really appreciate it. And so I have a very similar story, as you might have heard Paige tell. So I did experience the real estate recession, and that was in 2008, 9, 10, 11. I was a real estate broker back then, and I saw a lot of clients pull out of the market. They were investors. They pulled out of the real estate market before the crash. And then I saw a lot of other clients that held on and did not pull out in time and end up having to go through short sales and foreclosures. So it was really about timing what position that each of my clients were in. And so during that time, the amount of income that was coming in through the brokerage and for all the agents that worked with me had decreased by 2/3. So everybody was making less money. It was brokers and mortgage companies, and so all the professionals involved in the real estate were also in a bind. So I at that time decided I was going into teaching and people about short sales, foreclosures, the financial system. And I did that all the way until 2009. But prior, it was in 2014, 15, I started to see our prices were going up, but they were going up phenomenally, pretty quick. And so by the time 16, 17 hit, I really saw signs of inflation. The signs of inflation happened right around the same time that a good friend of mine from church said, "Hey, you got to check out this Bitcoin. It's a hedge against inflation." And so for me, it made sense because I'm right in the thick of it, right? We're working with real estate investors again, getting back into the groove again in real estate. However, there was another group in real estate, and that was the people that were suffering because they did not get the loan approvals for the prices that, and we still see that today. The loan approvals aren't as high as the prices of real estate. And also their credit scores weren't in the position to buy real estate. And so we saw a huge recovery period in the economy. At the same time, Bitcoin was created during the recession to be recession proof. And I didn't know it when it first was created, but when it was explained to me back in 2016, wow, that was a whole 7 years ago already. It made sense to me. And I said, wow, this is a way that people can get ahead of this inflationary economy. So that's how I got into it. It just made sense and it clicked. And I said, I got to learn as much. I'm already a teacher now. I got to learn as much as I can about this so I can go out and teach other people about how to make money in a downturn economy. And so that's where I shifted. And also, staying in real estate, I've also been teaching classes in the field of real estate about how this combines with the field of real estate too. So there's a lot of opportunity in this new tech digital economy for people to get in and jump into what I say, the new economy, because the old economy isn't making sense anymore.
Right. And you're saying a lot of things, which, and if you guys are listening, what she's saying is actually what we're experiencing right now. And that was back then, right? So here's the thing. Investing is cyclical. So therefore, all genres of investing are cyclical, right? Real estate is cyclical. So you just got to watch the trends. You got to watch the trends and see what's happening. So from what you just said, what I saw is that even though cryptocurrency is not new anymore. Well, it's new, but it's not, right? It's not as cheap as it was when you got in, right? But it is now still a hedge against inflation, which is where we're at in the economy right now. So makes total sense, right?
Yeah,
so
no, I have a couple of slides I can share to demonstrate that if you'd like me to.
Okay, let's see. I'd have to make you, give me 1 second. I gotta make you a co-host for that.
Yeah, because what I got and how it clicked for me, it wasn't understanding, a lot of people don't invest in what they don't understand. And so it wasn't about understanding the backside of the technology. It was about understanding the economical benefits. And so once we do that, oh, great, I can share my screen.
Yeah.
Thank you so much. So we're going into high tech here, high gear. But let's look at, this is my little symbol for AI, because a lot of people don't like AI, but remember, you guys are the ones that are programming AI. And when we go into a digital economy, you're going to see a lot of AI coming in, but that's a whole nother seminar. So let's start here. Purchasing power of the dollar has gone down. If anybody hasn't noticed, we can't take $100 bill into the grocery store anymore and buy everything we used to, right? So right now, today, what $100 used to be, we're looking at it about $3.64. And today this was in 2010. So 2023, we're looking at about 70 cents right now. And let's make this a little bit bigger here, because I really want, this is current time right here.
Yeah.
If we look at the purchasing power of the dollar, $1,000 at the beginning of its inception is now less than $20. So it's really gone down, our purchasing power in the current financial system. So we're talking about our money. Our money is the overall, how do we actually create our lifestyle and our outcome and our assets versus liability, right? So right now, I mean, incomes are not equivalent to the prices that consumers are paying. Now, if I go into Bitcoin, okay, remember this curve because I'm going to change it. Here's another curve. Bitcoin came into play during it just started in 2009. And people see it go up and down. But when you look at the short term, let's look at the first 4 years of it. The short term is, wow, Bitcoin went up and down and up and down, and it crashed. So people were all here, oh, it crashed. Then there was another cycle. It went up and down from 2013 to 2017. But this last one, which is one where I started to really be vocal about it, was in 2020. I started to talk in January 2020 when Bitcoin was $3,000. And I said, listen, if you guys get in this investment now, you're going to make some money and your value is going to go up. And the value did go up. And when we get up into this red zone here, we go, oh, it's bubble territory. It's time to seriously sell it. So that's when I said, okay, time to sell it. Yes, we have room to go up higher, which we are, because this was in 20 to 22. We saw it go up and then down. So when people say, oh, wow, I heard Bitcoin crashed, you got to look at the long term. So if we go back to the beginning here, it has not crashed. It continues to rise.
Rise.
But if you look at the short term, it goes up and it goes down based on the technological advancements called the halving, which I'm not going to go into now. Is this technology? Why is the halving significant? And why do we see a trend? So right now, Bitcoin, a whole Bitcoin, is valued, and it just went up 5% yesterday because of the announcements of the economy. And it's going to continue to rise as the dollar falls. So that's why it's an anti-inflationary, it's a deflationary asset. So you actually have more groceries you can put in your cart when you invest and hold your dollars or transfer them into Bitcoin.
Yeah. So, and I know we probably, let me ask you guys in the audience, if we do a different workshop to kind of go deeper into Bitcoin, would that be beneficial to you? Put it in the chat, because that will support what I'm going to say next. So if another workshop on Bitcoin, would that be supportive to you? I got to get a lot of yeses or I'm not going to do it. I'm just going to say that straight up front. I'm got to get a lot of yeses or we're not going to do it. And on top of that, I want to say that you guys get to know this, because this is not going away. See, because in 2009, when it came in, everybody said it was fake, including me. I said it was fake. Right. And here we are, 2023, and it's doing all the things. And thank you for sharing that chart with us, Lori, because that's super beneficial. Again, to my point that all investments are cyclical, all of it. It doesn't matter if it's real estate, It doesn't matter if it's stock market, it doesn't matter whatever you put your money in. The key though is to watch the trend so that you can hit it right where it's going to make sense for you to make money. And I see the halving coming up again. My son used to talk about the halving, but he didn't
Yeah, the
explain it
halving,
like
yeah.
this to me. It's
So
coming up
that's-
again.
Yeah, so economically, this is what we're looking at. The halving is technologically. So
Mhm.
technologically, this is where the miners, all the guys who are producing the Bitcoins. And again, Bitcoins don't get produced until you use them. So
Right.
when more people buy them, then more people are using this new economy. This is a separate economy from the dollar, and it's global. So it's not just based on the United States, it's based on the world economy. And
Mhm.
the reason why we see the increase in value is we see more people that are trading in basically their home currency for Bitcoin. And a
Mhm.
lot of dollars have left the US financial system because of the devaluation of the dollar. We see
Right.
the spending power of the dollar is losing its traction. And you know what? The Fed, they realize it, and that's why they continue to raise the interest rates. The interest rates are up to 7 to 8% right now.
Mhm.
Now, that's not something to stop you from investing in real estate. Believe me,
Right.
my first property I bought when I was 21 years old was at 9.5%.
Nice.
So, and then I also had one of my loans at about 11%, 11.5%. So yes, you can still buy into real estate, but when your dollar is going down, it makes it difficult. And how do you get ahead of the curve? And
Right.
so you can start just a little bit. And one thing to understand about Bitcoin, Lorna, is that it's fractionalized money.
Mhm.
So meaning that if I have $1, I can't tear it up in a million little pieces and use just a piece of it. I can't.
Right.
I have to use the whole dollar. If I have $100 bill, I can't tear it up into a million pieces and just use a little bit. Guess what? With Bitcoin, because it's digital, you can take it all the way down to a million pieces because it's fractionalized money. So guess
Good
what?
stuff.
Your money goes further.
Mhm.
And in the future, you're going to want to have 0.000001 Bitcoin. Maybe it's $5 today. Maybe you invest $5 in it today. But guys, you see the trend. It's going to be 500 in the future. So you're putting
Yeah.
more money in your financial future.
Absolutely. Hence building your wealth,
Then
which
you
is
can,
why
yep,
we are here.
well, then you can
Yeah.
buy more real estate.
This. Right.
Yeah, not less.
I love it. So, one of the things that I wanted to, and I know a lot of people here, it seems, and I don't know who's going to be watching the replay, but it does take a certain mindset to be able to shift into investing in this kind of economy. I'm going to call it an economy because, as you said before, it's a separate economy. How do you manage your mind around the shift, and what advice can you offer the audience to kind of like get their mindset wrapped around it, to know that this is here to stay, and how do I get involved, knowing that it's something different than fiat money, it's something totally different than what we already know from over the years.
Yeah, and that's a great question. So how do we shift our mindset into the new economy, the digital economy, and digital money? Maybe you don't really understand, but it's going to have financial benefits for you in the future. So how do we do that? That's the same thing with how we do it with any type of investing. Listen, don't be afraid to fail. Every investment I've gotten into, when I got started, I failed and I kept going and kept trying until I got it. And so that's the same with real estate. That's the same with digital currency. Most people who have invested in real estate or digital currency have actually had a hardship or experienced a bump in the road where they lost money. And that holds true for beginners. Now, when you take the advice of people who have been doing this for a long time, who have seen those bumps in the road themselves and have researched it, spent much time researching it, then that can help you to prevent you from making the same mistakes. And so we get to share our mistakes and our knowledge and our wisdom on how we maybe failed. Okay, remember, failed is finished another important lesson. That's all it is. That's all it is.
I
And when we-
love that analogy. Oh my
Yeah.
gosh, Lori, that's so good. That is so good. Let me write that down.
Yeah,
Go
finish
ahead.
another important lesson, because once you get it, once you fail once, then you're not going to do that again. You're not going to go bang your head up against the wall again. Most people can't afford to do that anyway. So
Right.
we want, I mean, and they were some pain points. I mean, I actually experienced some pain points in some of my investments, right? But for the most part, it's kind of like your upturn and downturn in your own life, right? When you look at your own economic upturn and downturn, we're going to have them. So we got to prepare. And I like to look at the digital economy. If you want to change your mindset, look at it as this: it's the future, AI, decentralization, new economies. It's not going away. It's just beginning. And you guys are going to be in the pre-innovation phase of this type of investment by getting in early. It is still considered early. It is not mainstream adoption. And so the mindset is, do you want to prepare for your financial future in a positive way?
Mhm.
You know, the risks on it, yes, there are risks, but you learn from the experts and the people who are doing it and have been doing it. And I'm very, very blessed that I got into it because having my dollar increase over the last 5 years has certainly been something that has been a hedge against inflation in my own life.
Mhm.
You
Yeah.
know, and so
Yeah.
I'm able to teach that to others on how to do that and when they should get out and when they should invest more. And I'm not a financial advisor, believe me, I'm not. I'm basically somebody who is advising you on where we're going in the future and not to be afraid. Just
Yeah.
you take risks. And again, one thing I want to share. So my main thing has been investing in businesses, and that is real estate and technology.
Mhm.
And this is technology. This is technology money that's been that's digital.
Yeah, I love that. So one of the things that I wanna ask you, and I know we're almost at time. If you have to leave, I understand, but I want to just land this and do watch the replay. Watch the replay, and if you have not already joined the Facebook group, join the Facebook group, the Freedom Lifestyle Creators Facebook group, and let's continue the conversation there as well. Before we get out of here today, Lori, I know that there are scammers out there, right? And if people decide to do this on their own, and not, hire an expert to support them along this journey, they can get taken. So how do you hedge against that? How do you prevent that from, because I know that you have some experience in that piece of it, and I want you to
Absolutely.
share with the audience, like what things do they get to do for themselves to protect themselves and their money?
Yeah. And thank you, Lorna. I love talking about this too, because it is decentralized and you're not working with a bank that has the FDIC insurance, and you are fully on your own and fully making the jump to become self-sovereign, really is what you're doing.
Absolutely.
Then when you work with an expert, the expert is not going to ever somebody might pose as an expert. They're not ever going to send you a link to invest here. Here's my link, invest here, and I will show you how you can trade and make 1,000 return on your money, or whatever, however much it is. If somebody sends you a link in WhatsApp or Telegram or Facebook, most likely it's a scammer that's trying to get you to invest on their platform. And look out for that. There are some credible exchanges, and somebody asked the question, Jeannie, where can you purchase Bitcoin? You can purchase in an exchange. However, there's a lot of fake exchanges out there too. So you want to actually choose the ones that are credible I've got a list of that are tried and true in research. I will never, ever have you sign up under my account. Okay. You're going to sign up under your own, and I will show you how to buy Bitcoin and own it. And so you buy it through an exchange, you hold it in a wallet. But to look out for the scammers that are, oh, here's the tried and true thing. When somebody is giving you hype, how much money you're going to make on their platform above anybody else's, the hype is what makes other people money. It doesn't matter what you get in. It's the hype that makes other people money. It's the long-term stability you're looking for. You know, hype, I got to hurry up and get into this. I might be missing out. No, you actually go for long-term stability in your investments for your future.
Yeah, absolutely. Thank you for that. I wanted just to have that put out there so that they understand they get to do a bunch of due diligence around this and talk to people who have been doing this before. So Lori, free gift, and where do people find you?
Yeah, so anybody who's here and anybody who's tuning in later, I would like to offer an advising session where I can actually show you how to set up a digital wallet. And it is one of the things I offer in a coaching. But for anybody who hears this, I'm offering, Lorna has my link where you can connect with me, and I'll show you how to set up a digital wallet where you will be able to hold your own Bitcoin in your own wallet.
Awesome. Amazing. And I know you're not a big fan of social media, but
Well, we all have to be these days, right?
right. So is there, where can people follow you? And I'm gonna put the link, your link, in the chat right now. If you're watching on the replay, just respond to one of the emails or something, and I'll get that to you. Or just go to the speakers page and pull it off. Lori, is there a handle?
Yeah, I have a YouTube that they can tune into. It's Innovative Economy. There's a lot of free education on innovative economy. We created about 120 videos. So yeah, there's a lot of free information. Updating some of the links, some of the older videos. I have some, so look at the links only in the newer videos, but where I'm actually sharing with you who's who and where you can actually invest. Not mine directly, but from my experience. So, but yeah,
Awesome.
I'm able to share that with you. Innovative Economy.
Okay, amazing. Thank you so much for being here today, Lori. This has been amazing. And I'm going to enroll you into doing a whole workshop around this so that we can push it out there and just give people information, because, you know, we had this conversation about how, you know, somebody brought Bitcoin to me in a different way, and it turns out it's not real, right? So just to have that environment where you can have somebody who knows what's happening, and you can tap into their knowledge, right? And know whether or not we're making the right decisions with our money as we try to grow wealth, and not try, but as we build the wealth and create a different economy in our lives. So thank you for being here, Lori.
Thank you.
And before we hop off, I just want to share with you guys, I'm starting a mastermind. I'm going to share a little bit more about that with you guys on Friday. It's going to be an amazing, amazing community. And we're going to have people like Lori coming back into the community to share wisdom and build wealth and just like create a different like support system for us as we grow together. So I'm excited to share that with you. So be here, bring your friends, go to the Facebook page, get involved, start asking questions, ask for what you want, and let us know what information, what content you want to see. Okay, so thanks for being here on day 3. Day 4, you know, it gets better and better and better and better and better and better as we build. So be here tomorrow, bring a friend, and thanks for being here. Have a great rest of your day. Bye now.
Bye-bye. Thank you.
Bye. Oh, put it in the chat what you got from Lori. Put it in the chat what you got from Lori. Don't forget to do that. And if you're watching on the replay, send us an email or go in the Facebook group, make your comments. I would really appreciate that. Okay.
Awesome.
Thank you to all the speakers, and thank you for the attendees. Thank you.